It's risky to be outside and around others. It seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
You need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point. That you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everybody. It is Hump Day. It is Wednesday, May 10th, 2023. Carol Masser, along with Matt Miller. Tim, you know, is on leave.
I'm here now. You were just talking with Joe and Kaylee, and I didn't realize that was happening. I thought I was still watching Romaine and David, so...
Everything Anywhere All at Once or whatever? Were you in a different universe?
I saw some of that movie. Over like 3 or 4 weeks, I watched a half hour every week. You know, I couldn't get through the whole thing at once.
You know what you need to do? I finally got through it on the plane with headphones and just hunkered down in a glass of wine, and I got through it.
Yeah, that's what has to happen, because you can't sit and watch it at home, right? Because it's just too long and weird.
My husband walked out, and then I walked out and fell asleep later. All right, hey, coming up, folks, I feel like the week of meh trading continues, although we do have a 2-year back below 4%. We're going to talk about that CPI report. We have a great roundtable, Matthew.
Yeah, I'm very much looking forward to it. And I have already talked with a number of very important people about CPI today, including Ed Hyman.
And the maker of Twinkies.
Evercore ISI and
I thought you might go there.
And the CEO of Hostess
Like, what is
Brands
that
as
stuff
well.
that goes in a Twinkie? Do we
You know what he said?
know?
He told me that they have, every year, they improve the, the ingredients in Hostess
Ari,
Twinkies.
do not cut to my face here,
I'm
because
not
it's
sure if
not
it's
going to
true.
be a good one.
Yeah, but I almost had one today, but then I decided not to.
We're not talking Twinkies. We're going to talk about taxes. We're going to talk about small business. We're going to talk about retail. We've got Jeff Jones, the president and CEO over at H&R Block. We've got Apple, not Apple, but Alphabet and Google, their AI plans. What are they doing?
Yes, exactly. Ed Ludlow's out there at Google. And here's the thing. I've been using...
Is he, or is it an avatar?
He's actually there.
Okay.
Or is he an android? Is that the question you were going to ask?
Oh, even better.
Yeah.
This is why we have
I've
you
been
around.
using Bing's Chat GPT search, and it's really good. So I'm excited to see what Google has.
We have been playing
come back
around
at them.
with it at home as well. Also, we have Marcus Shaw over at All Finance talking about more diversity on Wall Street. Folks, we got a lot to do, but right now, over to our TV colleagues, because we've got Countdown to the Close starting right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go in the trading session. Romaine Bostick, Scarlett Fu, joined right now by our colleagues Carol Masser and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals. And those folks, Carol Masser streaming on YouTube. Carol, you're smiling on a listless session. Matt Miller has actually taken off his jacket, so you know he's ready for something.
He just put down his phone. We were doing a tease with a show, and he's talking.
I'm like, getting down to work.
We're doing programming.
Okay, well,
and he's changed his headphones.
It's only
too.
3 o'clock, man. I'm
well,
glad you're getting
KB
down to
told
work
me to
now.
take off the headphones. He said it's not a good look, and I was
It's
like,
not.
but we're on radio.
You look
And he
like
said,
one of
"I
those
don't
old
care."
Time Life people.
All right, can we focus?
Am I dating myself?
Can we focus?
No.
It's kind of the meh week of trading, don't you feel like? I just, kind of looking.
Matt disagrees.
No, well,
For a radio audience,
don't
he's
open
shaking
the
his
door
head.
for him, Romaine.
I mean, you're the one who works with him.
Even if the
You're
index
locked
hasn't
in that
moved
fishbowl
much,
with him
there's
for
been
what,
so
3
much
hours?
going on, Carol.
4 hours?
Scarlett, should we go out and get like a
Carol,
cup
please
of coffee?
proceed and tell us
Okay.
about the trading day.
So I want to
stop
talk.
interrupting
All right,
me.
I don't want to talk about the broader market right now. We'll get to that in just a moment. I want to talk about lithium, which is what the world needs to go EV, right? And I thought it was interesting. We had a big deal. Australian lithium miner Alchem agreeing to acquire U.S. rival Livent. I hope I'm saying it correctly. Livent.
but it's okay.
Yeah. No, I am.
Okay.
Livent.
Okay.
Are you questioning me?
No, I'm livid. Go ahead.
You're livid? Livent, which is up 5% in today's trade. Albemarle, which is the world's top producer of lithium. Now I'm just like tripping all over everything. They are a little bit lower, but remember, they are trying to buy Liontown Resources, so another deal that they're trying to do. Liontown is up just about 0.25%. And then you have Lithium Americas. That is a mining company, Canadian-based. It's up about 3.5%. There's just stuff going on in the lithium space. And while we are focused on Disney and other things, we should keep an eye on what's going on in this sector. Matt knows about that, don't you?
Yeah, well, about lithium?
What EVs?
What are you implying?
You need
oh,
it.
EVs. I thought you were talking about my issues. No, so you know what? I'm paying attention to all these parallels I'm seeing to 2008. Torsten Slok, I think last night or this morning, sent an email saying, you saw that. All indicators for demand for loans and supply of loans are now at close to or below 2008 levels. Then I talked to Ed Hyman from ISI today, and he had a bunch of charts, including some from the FIB and CEO confidence that were below 2008 levels. And then David Inglis sent a chart about T-bills. We're now at levels that on the yield are above where we were in the great financial crisis, and that I think should be cause for concern.
I think it's interesting the correlation we're seeing today here between what's going on in the yield space and what's specifically going on with tech stocks here. You take a look at the broader markets here, a NASDAQ 100 and a NASDAQ composite are basically your leaders here on an aggregate basis here, up about 1% here on the day. The S&P higher by about 0.3%. Meanwhile, when you look at some of the more cyclical areas, including the Dow Jones Industrial Average and the transports, both down in the red on the day, Scarlett.
And that shows up when you look at the sector performances as well. Communication services and tech leading the way here. And really, we're talking about Alphabet. Although the streamers, including Disney, are not included in those gainers. Among tech, definitely the chip companies like AMD and KLA are getting a boost along with software companies, and REITs have been positive all day long as well. On the flip side, energy stocks declining, financials under some pressure as well, particularly KRE, lower for a 7th day in 8, the ETF that tracks regional banks, and industrials remain, as you mentioned, under pressure. Airlines declining today.
One of the individual bright spots out there actually today is Amazon, which is up about 3% on the day. In fact, it's actually been on a 7-day run, which I think is interesting here. We talk about up about 7-8% over that stretch here. So this is actually one of the longest runs that we've seen on a daily basis for the stock in some time. Meanwhile, Airbnb going in the opposite direction. At one point on the day, it actually had its biggest intraday drop since it went public on the back of some disappointing guidance. Disney earnings are coming up after the bell. Those shares are down about 1% here on the day. And keep an eye on IEP as a ticker, Icon Enterprises. Those shares down about 16% right now. Of course, this is the main holding company for Carl Icahn. A disclosure earlier today of a federal inquiry into that business's practices here. Of course, this stock has been under pressure for some time, given a short seller report. And now what we're learning here is a federal inquiry into some of those practices here. Flip it up just a bit here because we started off the day with the big economic report, the CPI report coming out for April, and it had a little bit of something for everyone there. On the services side, you did see moderation in some of those key areas, leisure, hospitality, and of course, even some moderation in rents and used car prices. That maybe gives Jay Powell a little bit more ammunition when it comes to the debate over whether the Fed should pause.
Yeah, but some great perspective, right? Because we're kind of stuck, though, still at pretty high levels, which is why former New York Fed president, I should say, Bill Dudley, who's also a Bloomberg Opinion columnist, he was earlier on on Bloomberg Surveillance after the CPI data came out. And he said, yeah, Fed making some progress, maybe one step forward, but there's also kind of 2 steps back when it comes to the mission. It still has a lot to do. Here's what he had to say.
The Fed's making some progress on the inflation front, but they haven't made much progress yet on the labor market and on the wage trend. So it's hard to see inflation going all the way back to 2% with a labor market this tight and wages this high. They're going to keep rates at this level, or maybe even a little bit higher, until they see signs that they're confident that inflation is going to get back to 2%.
That dreaded 2% rate. That's Bill Dudley. Bill Dudley, of course, former president of the New York Fed and Bloomberg opinion columnist. You know, the Fed's sticking to that 2%. You know, we talk about this a lot, Matt, that many say, and I'm curious what Ed Hyman maybe said, do we get back to 2% or is it going to be more like a 3% rate?
Yeah, well, he thinks we're getting there slowly but slowly, and that's a problem, right? So maybe the Fed has to raise again. Ed also thinks that we're going to see a recession by the summer, maybe the third quarter. He thinks it'll be mild, but still a recession. I find it difficult to understand how that happens when we're at 3.4% unemployment, right? I talked to Mike McKee, and he said, in order for us to get to 4.5, which is the Fed forecast for the end of the year, we need to be losing 200,000 jobs a month, and that's not happening, at least not this month. So the economy would have to turn down really fast. And how does that happen in a soft way? I just don't understand it.
Well, it hasn't happened thus far, and that's really what's confusing so many people. It does feel like the CPI report this morning really cemented ideas of a Fed pause, which feels like it's a new cut. Good news insofar as it's not terrible news, but a pause is still restrictive, as we know. And there are still people, I don't know who they are, betting on some kind of rate cut later on this year.
Or maybe recession with a strong job market. I mean, things could go a little wacky. We've had a very interesting kind of feel, I think, coming out of the pandemic, so who knows where it goes. We will continue our conversation, break down those Disney earnings after the closing bell. We'll be back on radio, TV, YouTube, and of course, Bloomberg Originals Disney shares just down about 1% ahead of that result. Join us at 4 p.m. Wall Street time. The company cut its outlook for the year after reporting lower earnings and revenue in its fiscal third quarter. So let's get into the quarter. Let's get into the business. This is a company that's been transforming itself over the last couple of years. Back with us is Jeff Jones, president and CEO at H&R Block. We've mentioned in the past his background, chief marketing officer over at Gap, Target, president of ride sharing at Uber. Formerly, Jeff joining us via Zoom from Kansas City, Missouri. Jeff, good to have you back here with myself and Matt Miller. Talk to us about the quarter, the outlook. What's going on?
Yeah, well, first of all, Carol, we definitely have not hit our 52-week low, so I want to be clear about that. Listen, the season did not end the way we expected it to. There were multiple industry dynamics at play. Our assisted business was a little softer than we wanted, but there are many, many things that went well this year, and I think that's what investors are hearing. You know, we still expect to grow earnings and EPS in a really tough backdrop. Our DIY strategy worked. We introduced AI. So, you know, there are many things that are working, but we were clear on the call yesterday. There were 3 reasons why our volume didn't deliver, and we feel like we got a really good handle on that.
What do you think investors are getting wrong here? Because, I mean, if it was a week later, you'd be at your 52-week low, right? I mean, just because you had an incredible May in 2022 in terms of the stock. Why are investors not understanding your optimistic view?
You know, I think like any company that has an unusual mix of business and seasonality, it's just hard to get your mind around that so much of our business happens in one quarter. You know, I think for some people...
It's been that way for how many years? Since like 1913?
Well, not quite that far. I mean, we have a very, very large and healthy tax business, and that's determined by one time a year. So I think that, you know, when you look at our financials and you see us lose money in most quarters of the year, but then generate 500 or 600 million of free cash flow, I think the investors that take the time to really understand the story, take a great long-term view on how we allocate capital, our dividend, our share repurchase, and it's a really good story.
All right, and just to clarify, I'm just looking at some data on the Bloomberg. It does say you're at the lowest level since about May 12th of 2022.
That's why I said it's a week.
Yeah.
If it was a week
Yeah,
later, it would be the 52-week low. You're at your 51-week low. Let's put it that way.
Just to say,
we're not $25.
Okay, fair enough. You are the CEO, you know, but I just wanted to clarify in terms of the data. Having said that, you guys are going through a transformation. And Jeff, when we last talked in terms of, I think it was back in August, we talked a little bit about the impact of higher rates. Tell us about the folks on your platform, whether it's individuals, whether it's small business. In terms of the activity you are seeing, what is it telling you about them and what it tells you about the broader outlook?
Well, I think the biggest thing we see is really the health of the consumer, especially. You know, we saw this year the tax industry got off to a really fast start. People were looking for their money. We saw these refund advance loans really perform well this year in the industry. That speaks to the cash needs of the American consumer. The problem is, for many, many Americans this year, refund sizes were down, 8 to 9%. And many people who are used to getting a refund suddenly found themselves owing money. So those kind of things are very confusing to the consumer, but we definitely see the consumer needing cash and looking for alternative ways to find it.
Why did a lot of filers see that change? Why were a lot of filers owing money when they normally get a refund? Because I think immediately of the SALT deduction cap, but that went into play in like 2017, 2018.
Yeah. So, keep in mind, giving tax advice is like asking Mayo Clinic for medical advice. Like, there's so many things that depend, but there are two broad things that happen. The first is the roll-off of stimulus benefits. The second is the IRS made a change to withholding tables, which essentially more people kept money in their paycheck, but didn't think about changing their withholding, and therefore, had a surprise at the end of the year. Those are the two main reasons.
Can I ask, and I'm sure you already have a plan, how can AI help you at H&R Block?
Well, first of all, there are many things we're already doing with AI. We use it in robotics process automation on remedial tasks. We use it to match labor and supply and scheduling. This year, we introduced an industry first in our DIY product, where if you switched from a competitor, we automatically and proactively looked at last year's return to identify any errors that may have been made. And if we found one that was worth more than $250 for you, we notified you so you could file an amendment. So there are a number of things that we're already doing today. And, listen, we have the same broad ethics, regulatory, legal, security, and privacy concerns as I think many companies do. But in general, we're excited about the potential for what this technology can do for customer support, customer service, et cetera.
I mean, can't AI make the tax code easier for humans to deal with? I remember Donald Rumsfeld's famous letter to the IRS where he was like, I have no idea, and I have a college degree. Like, my wife doesn't know either, so here you go. Can't this make it easier for Americans to file their taxes by themselves?
You mean basically talk to a bot and just do it?
Yeah, talk to an H&R AI bot, and it'll say, I file your taxes, and it's all done,
Yeah, I mean, I think what obviously has to happen is whatever average means, the average American consumer has to be willing to turn over all of their most intimate financial data to the bot. And,
for the average American consumer, that's like a W-2. Here you go. Here's my 1099. All done.
It's really not a W-2. Think about the earned income tax credit, the child tax credit, the way childcare happens.
Right.
Are you a grandparent, a parent, an aunt, or an uncle taking care of the child? I mean, there's an enormous amount that goes into this for the consumer every year, way beyond a W-2. There's no question this technology can help all of us provide better tax planning and make things faster. We're already leaning into that. But I think, the jury will be out over many years on will people be comfortable turning over essentially their financial DNA to the computer?
Well, and I guess I would argue, I know what we share with our accountant, and they pretty much know everything and anything when it comes to our finances. So you essentially are handing it right now to affirm individuals who put it into a database that you know,
my dad would never.
crossed,
My dad would
are secure.
never.
Okay,
He'll
okay.
do his own taxes until he
Okay,
dies.
But we are, and so are many other people. So I think it does sound like just kind of the normal progression. Hey, one thing I want to go back to, Jeff, because you do have a vantage point when it comes to your platform. San Francisco Fed coming out with their household survey, and they're saying that households are still strong in terms of the money that they have on their individual balance sheets, despite how many years we are out from the pandemic. Do you agree in terms of what you are seeing? Or do you feel like things are getting a little bit weaker and softer?
You know, what I can speak to, Carol, is the 20 million people that we serve and the last several months of seeing how important it was they got their cash. So does that mean they're excited to get it because they're flush and their bank accounts are full and their credits, their debt is low? Or does it mean, you know, that money's already spent? And what we see with the consumers we serve is that refund is already spent. And so, you know, it's not go on a vacation. So we still absolutely saw this year urgency to get cash and just too many people being surprised by the outcome for those two reasons I mentioned earlier.
Hey, I do want to go to, since you do know when your stock hits a 52-week low, and I was looking at, you know, the moves today, it's down about 4%. It was down 6% at its lows. What are investors saying to you? Because they obviously are disappointed.
Well, first of all, they're excited that we will still grow earnings. We'll still expect to grow EPS. We have a really strong capital allocation program. And when you put all that together, we deliver a really nice TSR. So they definitely see that. I think what they want to know is, you know, why did you lose volume this year? And there are three answers. And we're really clear with this. You know, we lost filers who make less than $5,000 of income, who were most likely in the system because of stimulus. That represents about a third of our client loss. The second is those EITC filers that were looking for refunds, refund advances. And the third, about 20% of our client loss is just due to the California extension timing. So I think the clarity about why we lost volume this year has helped investors understand that two of those three headwinds are behind us, and we're still generating a tremendous amount of free cash flow and deploying that very effectively.
Right, including buybacks, right, and dividend.
Correct, exactly.
All right, going to leave it on that note. Hey, Jeff, always fun to check in with you. Jeff Jones, he's president and CEO of H&R Block. Stock is down about 14% so far. You talked about TSR, of course, total shareholder return, joining us from Kansas City, Missouri. So your dad doesn't hand anything over, huh?
No, never. Would never. It's a little worrying, actually.
All right,
It's a little...
more to come on Bloomberg Business Week.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing right now. 38 minutes to go until the closing bell, with the S&P now higher by 21 points, a gain of 0.5%. We've got the Dow down 36. That is a drop of 0.1%. NASDAQ up 144 points, higher now by 1.2%. Treasuries are holding on to gains after a report this morning showed inflation moderated slightly in April, and swaps traders are upping bets that the Federal Reserve will be cutting rates this year. We've got more on the day's economic data coming up in just a moment. 10-year yield 3.44%. Again, that 2-year 3.90%. So the CPI report is behind us. What about the overall economic backdrop? Liz Young is head of investment strategy at Social Finance.
One of the questions that I get pretty often is, what would turn you from cautious to more optimistic? And the answer is always, if services inflation comes down, and it has shown signs of weakening. I think we are on the right path. It's a matter of, do we get to the goal before something else breaks? And I'm not sure that that's something that we're going to see happen in the next 6 months or so.
Spot gold, 2,031 the ounce, down 0.2%. Crude oil, West Texas Intermediate, down 1.4%, 72.67 a barrel. American used car prices rose for the first time in 10 months, reversing a decline that had been one of the key contributors to the slowdown in goods inflation. Again, recapping, we do have stocks trading mix. The S&P up 21, up by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so earlier we got an update on U.S. inflation showing signs of moderating in April, giving the Fed maybe room to pause.
Moderation.
I know.
I mean, come on.
So we're splitting hairs here. All right, let's get into it, because two folks who know a lot about it and have a lot to say about it is Bloomberg's Mike McKee and Dartmouth's Danny Blanchflower. Mike, of course, Bloomberg News International Economics and Policy Correspondent, who's been up for like 24 hours straight talking about this. He's on the phone in New York City. Danny, Dartmouth Professor of Economics, former member of the Bank of England's Interest Rate Setting Monetary Policy Committee. He's a labor economist. He's with us from Zoom in Hanover, New Hampshire. Folks, thank you so much for being with us. Mike, I want to start with you. You were on early, breaking it down as the numbers crossed. You've had hours to go over all of the data points. What are the key facets of this report?
Well, I think I said this earlier, and it really is the case that this was a status quo report. It didn't move the ball much one way or another. We saw inflation move up a little bit on a headline basis, largely because of the energy. We saw the core rate not go down very much, largely because of housing, and these are stories that we have seen before. So this isn't going to change the way the Fed is looking at the overall economy and looking at the fight against inflation. They can still pause in June, but it won't be because of this report.
So we saw for the first time an inversion, or the first time in many months, an inversion of the headline figure, which is now lower than the core figure. Does that mean anything, or does it just look cool on a chart, Mike?
I think it looks cool on the chart, Matt. The biggest thing is that we're going to see core start to come down when the drop in rental prices over the past year finally starts to show up in the data, which should be in the next month or so. But the core is the core for a reason. It is the stickier parts of inflation, and the headline numbers largely influenced by things like inflation and food, although food wasn't a big factor this time, but energy and food. Energy prices went up. They've started to go down again, so we'll probably see a change next month.
All right, Danny, come on in on here. You've been very clear on how you feel about what the Fed's been doing here, but do you feel like inflation is slowly, it's certainly better than it was a year ago?
Wait, how does he feel? Danny, how do you feel about what the Fed's been doing here?
Oh, well, I mean, I think that the reality, I mean, Mike laid it out very well and very carefully. The reality is that what's most astonishing is that everybody seems to have such a kind of accepted view. Everybody seems to think the same. All the central banks are saying the same things, and and we have unanimous votes. And the reality is, we just don't really know. There's no fundamental theory here. as to what's going on. What we see is inflation starting to fall. Today, basically what you got was the base effects for this month stopped working. So you dropped to 0.4 and you got a 0.4. And in the seasonally unadjusted, you get a drop. In the seasonal adjustment, you get it to stick at 5. So the next 2 months, we're going to have big base effects dropping out. And I think, in a sense, the discussion has to actually be, so what are the costs of inflation? I mean, we all sort of sit around and go, yeah, that's what the Fed's got to do. Inflation's such a terrible thing. Well, actually enumerate what a terrible thing it is. Yeah, well, I know that inflation lowers well-being, and I've measured a great deal of it. But the question is, what do you replace it with? And what are the costs and the consequences of overly tightening? And the answer is that a 1% rise in unemployment is between 5 and 10 times worse on ordinary people than a 1 percentage point change in inflation. So essentially what we're going to see is how much the consequences of what they're doing are much worse than the problem of inflation.
So Danny, you don't think we can have maybe a recession, though, with a labor market that is still strong?
Well, I don't even believe this thing about strong. I think it's kind of nonsense. I mean, the reason I think it's nonsense is that the unemployment rate no longer is a decent measure of anything. So I've worked on this forever. The unemployment rate is uncorrelated with wage growth. It's uncorrelated with it. The biggest macro problem you have is to explain why wage growth was so flat between 2010 and 2020 when unemployment was falling. Answer, unemployment rate is irrelevant. What you have here is lots of labor market slack currently being indicated by the non-employment rates and the labor force inactivity rates. That's what's determining wage growth and keeping wage growth down. If you try and look at every country in the world, every other country other than the US, the EPOP, the employment to population rate, is at least equal to its rate in 2000. The UK is well above it. Greece is even comparable. So the question you have to ask yourself, and to which I don't have a great answer, and we can discuss it, is why is it true that the non-employment rate in the US suggests to get back to 2000 levels, you need about 7 million more people working? So on that basis, I don't believe the unemployment rate, because nobody can show me anything that it's related to wages. I have lots of papers on it. And why is the US so much different to everybody else? So the argument you have to raise rates because the labor market's so tight is for the birds.
So let me ask you this, because, you know, in Econ 101, I was mostly thinking about keggers and the Grateful Dead. But why is it that, you know, the Fed wants to use unemployment and a recession to fight inflation, is what I get. They're saying we have to fight this inflation and we're going to have to accept a recession and higher unemployment in order to do that. And you say a higher unemployment is actually much worse than higher inflation, right? Why is that? Because inflation affects all of us, right? And unemployment only affects a very small portion.
That's completely wrong, actually, it turns out.
Okay. Obviously, a lot of keggers still in his life. I'm just going to say,
I remember talking to Charlie Evans, who told me, when I showed him these estimates, he said to me, Danny, this is great. Everyone told me always what you just said, that inflation hurts everybody. It's like 30 times worse than unemployment. So here's the story. We go measure it. You ask people about your well-being, and you say, so how much does inflation hurt you? So think about a 1 percentage point rise in inflation against a 1 percentage point rise in unemployment. Well, you get a number for the inflation. What you get in unemployment is, well, 1% of people are unemployed. So those people's unemployment rises a lot, and they're really unhappy. Great. But what happens is a 1 percentage point rise in unemployment makes people much more unhappy than a 1 percentage point rise in inflation. Now, you can argue, I don't like this, but you can say, this is the evidence, this is the data. Nobody else has any other data. Everything else about, they worry about inflation and inflation expectations is just dreamed up, make stuff up. This is the data. Yeah. The data says a 1 percentage point rise in unemployment. Well, there's a new paper by Robert McCulloch from New Zealand just come out, says that a 1% rise in unemployment raises pain 10 times more than a 1 percentage point rise in inflation. I mean, the problem for anybody who says that's wrong is they have no data. This is the only data that exists. And it shows that the impact of unemployment or joblessness is much worse. So I'm still waiting for people to tell me what are the consequences of an inflation rate of 5% that you're trying to get down by creating something much worse.
Danny, hang on a sec. Mike, come on in, our other economist.
Well, the obvious consequence is that people lose purchasing power and their standard of living goes down. And we saw that very specifically during the 1980s great inflation, which is what scared the pants off of all the central bankers who are now trying to bring down inflation. But I was struck, Andy, by what you were saying about wages. Wages are still rising at a very high pace, especially compared to what they were doing in the teens. We're still well over 4%, and inflation is still running above that level. So people are still losing grounds, even though they are getting raises at this point.
Danny got about
I
20,
agree. Let me
just
answer.
about 20 seconds, though, unfortunately.
Well, real wages are flat over the last year. And obviously, for the level of the unemployment rate, wage growth is actually still very compressed. I mean, in the past, if you had an unemployment rate of 3.5, you'd be talking of wages greater than that. So the answer is that the unemployment rate is uncorrelated with wage growth. Just get it into everyone's heads. It's completely uncorrelated with it. It has no relationship with wage growth whatsoever. You can't run it in any form of wage growth, be it a Phillips curve or anything else, or a wage curve. The unemployment rate is uncorrelated with wage growth.
We got to run. We'll
I'm tweeting
continue
that,
this.
though. I'm going to tweet that because I think that's the most
It's
fascinating thing that I've heard today.
All right, we got to say
Easily.
goodbye to Danny and to, of course, our Michael McKee, Danny Blanchflower over at Dartmouth. All right, right now, off to D.C., Nancy Lyons with World and National News. Hey, Nance.
Thanks, Carol. It is a not guilty plea from New York Congressman George Santos, who appeared in court this afternoon after being accused of duping donors, stealing campaign funds, lying to Congress, and cheating to collect unemployment benefits. He just spoke with reporters outside the courthouse.
Look, this is the beginning of the ability for me to address and defend myself.
Santos says he does not plan on resigning from Congress. A panel of FDA advisors has unanimously backed allowing Perrigo's birth control pill, Opill, be sold without a prescription. The advisors say the benefits outweigh the risks. If the FDA agrees with the recommendation, it could significantly expand access to contraception. A decision is expected this summer. Chief executives of 3 major drug companies and 3 pharmacy benefit managers have been explaining to the Senate Health Committee today why prescription drugs are so costly.
Chairman Bernie Sanders focused on U.S. prices much higher than the same drugs cost elsewhere. He asked David Ricks of Eli Lilly Pharmaceuticals.
Mr. Ricks, will you commit to lower the price of Cyramza in the United States to the same price that you're selling it in Germany?
That product has been on the market for a while. We do expect biosimilar entry. That's the primary mechanism in the U.S. where the price will fall. When that occurs, I'm sure there'll be competition.
The drug executives blamed major insurers and their pharmacy management subsidiaries for negotiating rebates and not passing them on. They blamed drug makers for gaming the patent system. In Washington, Irv Chapman, Bloomberg Radio.
A bipartisan Senate bill creating a COVID-19 commission has been introduced. It would look into the origins of the COVID-19 pandemic, public health messaging, vaccine development, and distribution. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long for you here at Bloomberg. The Dow just turning higher. We have got the S&P in the green, as well as the NASDAQ Composite Index. Lots going on today, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Another choppy session for the main U.S. averages. Dow, like you said, is now higher by 12 points, was down 322. S&Ps are higher by 26, and NASDAQ gains 150. The U.S. 10-year yield at 3.45%. Gold is down 4, oil trading in the red, and Bitcoin is little changed. Among the main 11 S&P sectors, leaders were telecom and tech. Energy was under pressure, and leaders to the upside in the Dow, Salesforce and Microsoft, while American Express fell 3% and led to the downside. After earnings, Airbnb fell as much as 14%. And in other news, the Google Cloud CEO announced new AI models for corporate clients. Those shares are now up 4.5%. Also noting here that 3M fell to a 10-year low. Wrapping things up, Disney reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much. Bill Maloney will be all over Disney when those numbers cross the wire. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, under 18 minutes left in today's trading session. We got a 2-year note, as we heard from Charlie, still down around 3.9%. But more importantly, well, not necessarily more importantly, but we do have some buying as we get towards the last 20 minutes of trading here. 1.2% higher on the NASDAQ. We're off definitely our lows of the session, at our highs when it comes to the NASDAQ trade. So, yeah, that's what's going on. So let's get to it with our Drive to the Close guest. Ellen Lance is back with us, research director at lanceglobal.com, joining us on the phone from Toledo, Ohio. Ellen, nice to have you here with Matt and myself. So it is an interesting day. I've been calling it kind of a meh week of trading because it feels like we're looking for direction. What's your take on where you can find opportunities in this market environment?
Well, I think, Carol, it's a situation where, the market has been presenting opportunities in the beginning of the year with the mega caps, after the mega cap tech stocks were down so much, over the past few weeks. You had companies like Akamai Technology and Google that really are in good spaces that we like cybersecurity and AI, and they really had underperformed, and today both of them are up, and I think investors are realizing, or Wall Street's realizing that both companies are going to have a significant take as far as in cybersecurity for Akamai and AI, obviously, for Google. So I think that's where you really got to avoid the torpedo areas, like the small banks and the regionals, and capitalize on these areas now that might not have performed yet, are in good long-term areas that can do well. And I think that's the type of market we're going to have winners and losers, and the divergence is going to be pronounced.
Are you worried at all about drop in stocks if we don't have an agreement on the debt ceiling? I look at before TARP, we had stocks drop 8%, and in 2011, when our debt rating was downgraded, we had stocks drop 20%. So, that could bring us down to 3,700, or could bring us down to 3,300.
Yeah, I think, Matt, we're in the higher end of the range, so I would be a little bit more selective now. And obviously, if something as dramatic as 2011 occurs, I would utilize that as a buying opportunity, but selectively. So we're not real concerned with it, but we are in the higher end of the range, so it would be just a matter of risk profile to not stretch and chase things here because of what you said and other geopolitical and interest rates, etc. I mean, there's a lot of headwinds, and there's no really reason to chase stocks, especially some of these areas have done so well.
But how much of this, the worries, are already factored in?
Well, some of it, is already factored in, Carol. But I think it really depends on the area. I mean, like energy has gone down quite a bit. So if you think that we're not going into recession, that might be a good area with China opening up.
Is that economic slowdown, or is that also the shift away from fossil fuels? I know it's a slow shift, but it's happening.
Yeah, I think it's more the economic slowdown and a switch, from a standpoint of just the sentiment and what have you. So I think that's going to hurt, and that's why you have some of the utilities that have outperformed that are in the alternative space, while some of these others have dramatically underperformed. So again, it goes back to the winner and loser, categories more so than the specific sector.
You think the bank turmoil is behind us? A couple times we've thought that, and then we saw another bank fail. But it does seem like Wall Street is pretty sure that all the banks right now have enough assets to pay out depositors if they need to.
Yeah, I think the worst is behind us, Matt. I think it's a matter, if something else, arose, then again, the area that's going to get hit are the areas you want to avoid anyway. But actually, a J.P. Morgan is going to be stronger, and that's why you want to be in a J.P. Morgan or a Goldman Sachs, and if we're wrong and things escalate and get worse. But I think the majority of it's behind us, and it's just going to be a one-off type event, from here on in. I don't see it really becoming a contagion, or anything disastrous, especially in the U.S.
Hey, listen, one of the things that you've liked in the past is in, the travel and hospitality space, and I'm thinking about Airbnb, which is getting hammered today. Is that an opportunity, or have you guys suggested people be out of it ahead of this earnings? Where are you on that?
Yeah, we liked Airbnb in the 80s, and obviously the stock rose quite a bit.
Mm-hmm.
So if it falls back a few more days like today, and we'd be back then buying. It's a long term hold at these levels. But again, it shows the importance of taking profits. We took some profits in Treehouse Foods, something we talked about a year ago, and went from the 30s to the 50s, and we think it could be taken over, but we're probably looking at a $60 price, and it's not worth it in the mid 50s anymore to hold on. So yeah, that's a good point. I think as the market sees this volatility and winners and losers, take some profits, at least partial profits on some of these winners.
What do you think about Apple coming to the market for bonds when they already have $170 billion in cash? They only offer a 0.5% dividend yield, which I don't get. I know they do big buybacks, 70, 80, maybe $100 billion this year, but how do you feel as a shareholder?
Yeah, the company's great. I feel real comfortable with it. We're not buying it at this level. I mean, our average cost is far lower, but we did buy Alphabet when it went down, and we did actually buy some Amazon. So some of the mega caps we did buy it at the end of last year, but not Apple. Apple has really held up pretty well and never got into buying territory, unfortunately for us.
Alan, I'm just curious because we've got Disney reporting after the close, and just kind of springing this on you. Just got about 30 seconds left here. Is Disney a name that's on your radar?
If it continued to weaken, we'd look at it, but it's not one of our favorites. I think there's a lot of other areas. I think streaming, those type of stocks, you have to be worrisome. And I never really understood that concept from unbundling, and now you get all these different streaming services. So I'd be a little bit cautious. But again, if it weakened enough, it is a high quality company, but nothing that we'd be buying at current levels.
All right. Well, fun to check in with you. Really appreciate it. Alan Lance, Director of Research at lanceglobal.com. President Fallon B. Lance and Associates on the phone from Toledo, Ohio. Just got about 10 minutes left in the trading session. You're kind of nuts about this Apple dividend, aren't you?
Yeah. Well, I mean,
why?
Because I wonder why they don't offer a dividend to speak of.
I don't think they have. Well, when they do
I guess they don't have to.
When they do massive buybacks.
Well, you don't know. You can't plan with that, right? So it's not helpful for investors.
What are they going to do with those billions?
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. 3:53, the time now on Wall Street. We are minutes away from the latest numbers out of the Walt Disney Company. They'll be reporting after the close of trading. Keith Raghunatham is a media analyst with Bloomberg Intelligence.
Obviously, a lot has happened over the past few years. Majority of that is tied to the streaming losses or the lack of streaming profitability. So really, I think Bob Iger's main agenda item is to communicate to investors and to the street how he is going to be able to turn the ship around and how he is going to get streaming to be a profitable business.
And the Walt Disney Company stock down now by 1%. We'll have complete coverage on Disney after the close of trading as those numbers hit the Bloomberg. Both Warner Brothers Discovery and Paramount Global are reporting steep drops in traditional TV advertising. That was last week. Investors will also be looking for any signs that losses in the Disney streaming business are ebbing amid an overall cost-cutting push cash at the company. Again, ahead of earnings, we do have Disney shares down by 1%, Warner Brothers Discovery down now by 2.3%, and Paramount Global lower by 4%. Sources say Apple's top executive in charge of its video and sports businesses is departing, reshuffling a services division that has fueled much of the company's growth in recent years. The executive, Pete Distat, plans to leave Apple this month. Today, Apple shares, they're up by just about 1%. Mixed day on Wall Street, few minutes to go ahead of the closing bell. Those are some of the company stories we're following this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session. Getting ready to head over to our TV team and do Beyond the Bell and also break down those Disney earnings. I'm Carol Messer along with Matt Miller. We're going to talk a lot about the market here, but did you see the story by our Prashant Gopal about New York City area rents surging by the most in nearly 2 decades?
No, I did not see that.
Why, were you busy doing something else today?
No, I just tend to, ever since I got out of the New York City rental market, I just don't look that much.
When were you in the New York City rental? Oh.
I rented on 68th and Broadway was my last rental in 2010.
Okay.
And
it's a while ago.
You know, at the time, it was too expensive for me. I couldn't afford it anymore.
You moved out and actually bought a house.
Exactly. I bought a house. I was lucky enough to have saved up the down payment. I've always felt bad because I feel like renters subsidize the tax breaks that homeowners get.
There's always been that debate, like why do
it seems unfair to me. And if you don't have a down payment saved up or gifted to you, you get caught in that rat race, and it's tough. But when I did move back from Germany last year, I looked because I thought about renting a place in Manhattan. I can't afford to buy a family-sized apartment on the Upper West Side, but it was so damn expensive that I said, forget it. I went back up to Scarsdale, back up to Westchester.
And it made more sense.
I don't know how do you raise a large family or a medium-sized family in Manhattan? I don't get it.
Well, you have multiple people in a bedroom. It's not easy. We know that. Or it's just really wealthy people who basically can do it.
Yes, okay. Being really wealthy is the best way to raise a big family in Manhattan.
Yeah, I learned that in my economics classes. Be rich and you can do anything you want. All right, Disney on our mind, guys. Charlie was talking about stocks down a little bit ahead of its
Stocks are
earnings.
up.
No,
the S&P 500.
Disney. Are you listening to me?
Oh, no, I just think it's interesting that the S&P 500 is up right now because you'd expect the debt ceiling situation to be weighing on markets. I guess they're happy about the pause.
Matt, we're going to have a lot of meetings and a lot of discussions and a lot of press, conferences in the driveway of the White House and in front of the Capitol about this. Don't you think so? Before we get to something?
Oh, I have to sit down for the simulcast?
Oh, my God. Focus.
Paul told me I have to sit down for the simulcast.
You sit, put your IFB in. I'm glad somebody's, got this thing under control, or maybe control in quotes. Right now, we're going to head over to Scarlett and Romaine. We're going to count you down to the close, bring you those Disney earnings. Disney shares are down 1%, but the market, for the most part, is up.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Carol Masser and Matt Miller. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and of course our partnership with YouTube. Carol, stock's not far off the session highs, but we should point out this is really a mixed bag of trading. Really, most of the gains concentrated in some of those big cap tech stocks.
Yeah, NASDAQ overall up about 1%. I'm thinking about Google probably helping out because it's topping the NASDAQ 100 and the S&P 500. Laying out some products, some services, talking AI. That stock, Matt, is up 4%.
Yeah, so Google's a gainer right now. I'm looking at Airbnb. Those shares are down. We actually talked to the CEO, Brian Chesky, at about 1:30. The shares got hit hard by a weak outlook, and actually a lot of the analyst notes that I've read have said Booking is a real competitive threat. Now, Chesky said he doesn't see Booking taking market share from them, but it was mentioned by at least Morgan Stanley and Piper, so it's a concern for the street.
Yeah, it's interesting because clearly consumers are willing to spend on things like travel, but they're probably going to be more careful and more picky about where they spend. So they're definitely fine-tuning how they're deploying that cash.
Yeah, that's right. Of course, we talk about sort of the earnings picture overall that we've had up until this point here. The idea that not only are there, the beat rate was, I guess, more than what people expected, but really the guidance, the beat on guidance. And I think there's some interesting data that the folks at Bloomberg Intelligence have put together here about the beat on that guidance, something that isn't always closely tracked. It'll be interesting to see what we hear from Disney in just a few minutes here. The countdown to the close continues here with the closing bells. The Dow Jones Industrial Average looks like it's going to finish the day relatively unchanged. It's down about 33 points. That's going to be about a 1/10 of a percentage point drop on the day. The S&P 500 higher by about 18 points or 0.5%. The NASDAQ Composite higher by more than 100 points or 1% on the day. And the Russell 2000 holding on to its gains for the day, going to close higher by roughly about 5 to 0.6%.
All right, Romain, we know Scarlett's going to dig into the major industry groups in the S&P, but, you know, Scarlett, you mentioned this earlier, the financials, the banking, whether it's regionals, are down about 1% today. And if you look at the KBW, it's down about 1.25%. So we're seeing selling within those groups.
Yeah, resuming the weakness that we've seen for the last week. And certainly that's reflected here. Banks along the bottom here down 0.75% as a group, also losing ground. Energy stocks lower by 1.2% as oil prices decline. On the flip side, you guys mentioned Alphabet. That is lifting the media and entertainment complex along with Netflix. Software and services also doing better, 1.6% advance there, and retailers as well. But really, it's the tech complex that steals the show here.
All right, as we await Disney earnings, folks, let's go to some of the individual gainers. Rivian, we talked about it after the close yesterday, at its highs, up 13% today, finishing, though, with about a 2% gain. It was among some of the top gainers in the NASDAQ 100 earlier in the session. Reported a narrower than expected loss to start the year, reaffirmed its annual production plans as efforts to really cut costs seem to be taking root at that company. So that was an outperformer. Akamai Technologies up another 8.5%. It was number one in the S&P 500. Reported first quarter results that beat, gave a full year forecast ahead of the analyst consensus. But some analysts are kind of expressing some caution about the long-term prospects for this company. So biggest jump, I think, in about since 2020. And then I do want to mention Zscaler, man, up another 6%, top among the NASDAQ 100. It's up about 35% in the past 6 trading days. That's since it reported earnings and said it sees above guidance for the third quarter. So this one, Matt, has been on a tear.
All right, I mentioned Airbnb already, but that stock closing down. It was down 14% last time I looked. Airbnb, this is the after hours trade, right? So, of course, you're not going to see what happened during the session. In fact, it looks like those are all the after hours trade, so they're going to be unchanged if they're not trading shares. But during the session, Airbnb got hit hard. Also, Romain, you were talking about Icon Enterprises. Those shares got hit really hard. I walked down to Fresh & Co. around 2 o'clock, and I'm pretty sure I saw Carl Icahn just hanging out on the street.
What?
He was wearing a baseball cap. He was talking to one of the garbage guys.
He always wears this little windbreaker.
Yeah, he was wearing like a maroon sweatshirt. Okay. I'm not sure if it was Carl Icahn, but it looks like Carl Icahn. In any case, they had first quarter revenue down 35% year over year, and they've been called in by the U.S. Attorney's Office for the Southern District of New York looking for information. Of course, they had that short report from Hindenburg, so very difficult times, I guess, if you're an Icon shareholder, even though you're going to get the dividend. Also, H&R Block, after earnings, dropping not to a 52-week low, though. I want to point that out. H&R Block is not
because I said it got near it, and the CEO
low.
Reminded me it wasn't quite at a 52-year.
You can see
52-week low.
Yeah, and then Dutch Brothers, which I thought it was like a maker of blunt wrappers, but it's actually a coffee shop. So Dutch Brothers down the most since February. Quarterly results disappointed in same-store sales, and I guess people are using either the local coffee shop or Starbucks, or maybe they also were disappointed when they went in there and found no blunt wrappers.
Let's take a look at what's going on in the yield space here, because this really was the big driver of what we saw in the equity market. Remember, there was a sharp drop down in yields right around that 8:30 mark here when the CPI report came out here. A big readjustment here. We're talking about 12 basis points down on a 2-year yield, back down to about 3.9, and even on the longer end of the curve, right around that 10-year and the 20-year, we saw a drop of about 6 to 8 basis points. More importantly, I think it's interesting the repricing that we saw in the swaps market. Remember, just a week ago, basically heading into that Fed meeting, you had about maybe 35 to 40 basis points of rate cuts were being priced into the market. As of right now, you have more than 75 basis points of rate cuts being priced in this market for 2023 alone, despite the fact the Fed has made it clear, at least up to today, that it has no plans to do it. And that really brings us, I think, to the broader issue here. Everyone has been tracking so closely, guys, what the Fed is doing or what they might do here. And I guess the question now becomes, has the market taken its eye off the ball?
I mean, pricing in 75 basis points of cuts seems a little unrealistic at this point. I find it hard to believe, but it is interesting to see kind of this disconnect between maybe what the Fed is saying, and we'll see what more Fed officials have to say, and versus what the market is showing.
Didn't John Williams, the president of the New York Fed, just say yesterday that he doesn't see any scenario in which there would be a rate cut? I mean, he made it really clear. You can't be more... We have Disney earnings
are crossing the wire right now. Here are your 2Q numbers coming in. Revenue at $21.82 billion. That's pretty much on the nose of what the street was looking for. Their fiscal 2Q adjusted EPS coming in at 93 cents a share. The street was looking for 94 cents a share, so a modest miss on that front here. Disney Plus subscribers in the current fiscal quarter, in the past fiscal quarter, 157.8 million. That's a miss. The street was looking for 163. For their streaming losses, remember, we talked about the losses in that streaming business. They did narrow in the most recent quarter, a $659 million loss for the streaming business. The street was looking for a loss of about $850 million. Let's go through just a couple of their other divisions real quickly here, guys. Parks and Experiences saw operating income of about $2.17 billion. That's relatively in line with what the street was looking for. The Media and Entertainment Distribution operating income coming in at about $1.12 billion. And we should point out the revenue, guys, for both of those units, relatively in line with street estimates.
And the big question, I think, during the conference call, one of them will be whether Bob Iger, the new or old CEO, depending on how you look at it, is going to reinstate the dividend as well. Both. There you go. Of course, they suspended their payout in 2020 to preserve cash during COVID, and everyone was looking to 2023 as a potential timeline to return resuming these semi-annual payouts. So that's going to be a big question, because once you resume payouts, then you open your investor base to a wider set of people.
Yeah, that subscriber miss, though, still is a little disappointing. And I'm just looking at the press release. Bob Iger is talking about, from movies to TV to sports news and our theme parks, we continue to deliver for consumers while establishing a more efficient, coordinated, and streamlined approach to our operations. So we know they've been cutting costs, right? They gutted the team that built Disney Plus. So we know that they've been making changes, but it sounds like they're still working on it.
Let's focus on the traditional TV business real quickly here, because I think this is interesting. A 35% drop that we saw in profits at the traditional TV business. So this is basically the broadcast business, more or less here. A 35% drop down to $1.83 billion. And remember, a lot of folks had looked at the results that we got out of Warner Brothers Discovery as well as Paramount, and they sort of saw this coming, a drop in ad spending. Disney is attributing that 35% drop to the result of higher sports programming costs and lower advertising.
All right, so we're looking at the shares dropping here a little bit in the aftermarket, 1.5%, not a huge drop, although obviously it's a very big company. Disney's a $85 billion company, so that does take as it could have been, I guess.
And don't forget, a lot will happen on the earnings conference call. Bob Iger is the ultimate showman, and he usually does this sandwiching of good news in between bad news, and is able to give investors a new focus that Disney is working on, and not unveiling necessarily, but a strategy that it's pursuing. And so I would expect to hear him say something that will get investors excited.
Yeah, I'm looking at international also down. Revenues there were down about 18%. Lower advertising. Romain, forgive me. You were...
No. I mean, you can finish your thought, but I was just saying kind of what I'm looking for too. I wonder if they're going to mention anything about Hulu specifically, and obviously the idea of getting rid of some of that stake here, because I think some people, when they're talking about right-sizing those costs, they see that as sort of an easy, sort of low-hanging fruit way for Iger to do it here. So it'll be interesting. It's not, I don't see it in the press release, but it'll be interesting to see if it comes up on the call.
No, just talking about the decrease in operating income at Hulu due to higher programming and production costs. I mean, remember, and lower ad revenue. But remember, Hulu was at a time when all of these folks did not have their individual streaming services. So at this point, you have to question what is, the value in still having Hulu around. Forgive me for saying, but you have
No, I think everyone has that question. I mean, it's sort of, at least the initial concept is kind of a little bit outdated. So it'll be interesting to see whether they move away from that. Also, I'm interested in hearing, Scarlett, too, about what they're going to do with ESPN, because, of course, investors want to see that separated.
Always.
But Iger's made it clear, at least he made it clear last quarter, that's not on the table.
Yeah, absolutely. All right, let's talk about Robinhood, because it also came out with some numbers, and the stock is moving higher in after-hours trading by more than 6.5% right now, and this is after its first quarter revenue beat analyst estimates. Net revenue, $441 million. Analysts were looking for just under $423 million. For the bottom line, though, it still is a loss of $511 million. But transaction-based revenue coming in slightly better than expected. Net interest revenue also higher than anticipated, $208 million versus $191.1. And let's see, crypto revenue, which is not a big part of the business, but it was $38 million.
Revenue?
Apparently they do.
It was down 1% though.
Yeah, there you go. And that is slightly lower than what analysts had been anticipating as well.
Against comps of, remember, this quarter last year, crypto was still extremely hot. I want to point out Beyond Meat is a big mover. It's one of the biggest movers in the after-hours trade on the upside, up 14% after coming out with revenue that was better than expected. And Sonos, the speaker maker, one of the biggest losers in the after-hour, down about 10% right now. Sonos coming out with revenue that was in line, but adjusted EPS 4 cents a share. That beat the estimate. So for some reason, even though it beats, Sonos is a loser after hours.
Yeah, interesting. And I'm just looking again at Sonos down 11%. You've got Disney trading still a little bit lower, down about 2% in the aftermarket. All right, guys, that is a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We'll see you again, same time, same place tomorrow. All right. You are listening and watching Bloomberg Business Week. Matt Miller and Carol Massar. We're going to, just like our TV colleagues, stay with Disney because the stock is down about 2.5% in the aftermarket. So let's get to it with Jamie Lumley, senior analyst at Third Bridge Group. They provide global research to PE firms, hedge funds, and consultants on the phone in New York City. Paul Sweeney, co-host of Bloomberg Surveillance and Bloomberg Markets, with us on the phone.
My man.
From New Jersey. He is. Paul, let's start with you. What jumps out for you at Disney?
The first number I went to, the first line item I went to was the streaming losses. Now, the good news is the losses of $659 million came in less than the estimates, which is about $850 million. So that's the good news. The bad news is $659 million is still a huge loss just for one quarter. So I think on the call, investors will want to get a sense from management, where do they see that glide path for that business as it tries to get to break even?
All right, so it looks better than expected. I wonder why, at least, on the headlines, I wonder why we're seeing the drop then in the stock after hours. Jamie, I guess you could never really tell, why investors are buying and selling across global Wall Street. But what do you take out of this that could be bearish?
Well, I think there are definitely a couple of interesting things to look at for revenue. Certainly I also first looked to see what the line item was for the losses in streaming, as that is one of the big stories over the past couple of quarters. And trimming those losses is definitely one of those things which Bob Iger is putting at the top of his to-do list. And certainly I think there is some encouragement to be found in that those losses are being trimmed. But again, it is a large amount of money which is losing, and also coming off the backs of Warner Brothers Discovery last week reporting that their streaming business is starting to turn around a profit. I think there is ongoing pressure to see some slightly more positive results in that segment. However, other things to look at as well is overall revenue seems to be delivering some strong growth, looking at 13% overall top-line revenue growth from the year-ago period. So there are definitely a lot of factors, and I think that as we look at the call later this afternoon, there will be a number of areas where it'll be just interesting to see how management is interpreting these results and looking at what are the top priorities that they want to discuss.
Yeah, I got to say, when I look at, streaming, it's still such a smaller business when it comes to what goes on at Disney, Paul. But is it right for Disney? I mean, they have such incredible content, I feel like, and they are really good at usually leveraging across parks and movies and so on and merchandise. Can they figure out how to make this be a lot more productive when it comes to top and bottom lines?
I think they can because, as you mentioned, they have such great programming across their film studios and television studios. They've got arguably the best content on the planet. They, like everybody else, has to make that migration from the traditional pay TV model to the streaming model, and that is a very expensive transition. And the payoff at the other side is a little bit unknown at this point. So if you're an investor in Disney or some of these other big media companies, you're really making a bet on management to execute here. So again, that's why these conference calls and these meetings with investors are key because, boy, we see the programming costs really, really high, and you got to really make a stretch to see when this thing turns profitable. And that's why Bob Iger really has been focusing on the cost side of the business as well as the top line.
And to be fair, he gutted, a lot of the folks that were behind Disney Plus initially. So we know he is remaking it in terms of the management.
Wait, Disney Plus, that's the streaming service.
Correct.
So I guess I watched that a lot, but only like 3 films. We watch Encanto, Moana, and Frozen. Well, Frozen 1 and 2. Jamie, what about ESPN?
Well,
this is something
Marvel
that
stuff.
This is something Marvel.
Come on, Matt.
What am I, a
Get
kid?
with it. No.
Jamie, what do we think about ESPN? Paul and I talk about this all the time, and it feels like they could do a heck of a better job at monetizing that incredible content, and they just leave so much money on the table.
It's definitely an interesting question. And looking at ESPN and ESPN Plus, it has definitely been one of those hot button issues over the last year or so. And looking at, as you highlighted, the value of content there, one of the big questions, of course, around the overall cost, looking at sports rights and renegotiation there, but then also just the best way to monetize that, of course, across the traditional linear channels, as well as the streaming side of things. It is definitely far smaller than Disney's other streaming offerings. And there are some questions about overall as streaming in general continues to see a rise in live sports across a variety of different platforms, looking to have that be one of their areas of focus. What exactly Disney will be doing for ESPN Plus and ESPN is a big question. Earlier this year, of course, we heard that Bob Iger is not really entertaining at this point any thoughts about divesting that part of the business. But exactly what the plan is one of those things which our experts continue to say there is some uncertainty around.
I just mean because, a lot of people don't have cable anymore. But the best content that ESPN has is only available on cable. So suckers like me that buy the ESPN Plus service realize later that we can only watch like Duke's JV field hockey team, No offense, Paul.
All right.
Jamie, what can they do about that?
It's a really good question. And I think that one of the things that we've certainly heard is also just in the general nature of the challenges of sports streaming in general. Because of the seasonality of it, you have just a lot of challenges to the overall fundamental business model of getting sustainable subscribers and not having people hop on for when their team is playing and then immediately leave once the season is over and March Madness is no longer upon us. So for that kind of model,
right,
they're still trying to figure out exactly what to do here.
Yeah, I'm just reading from the press release. Decrease at cable due to higher sports programming and production costs and to a lesser extent lower affiliate and ad revenue. All right, folks, just got about 40 seconds. 20 seconds first to you, Paul. What would you be asking on the call?
Just the streaming business. Give me the updated path to profitability for streaming.
All right, how about for you, Jamie?
I'm still curious to hear what's happening with Hulu. I think that's one of the big question marks coming off of the back of the leadership transition, another of those areas with a lot of uncertainty. So also how that factors into streaming is another big area.
Hulu subscribers, 48.2 million. That is more than ESPN Plus, and that is certainly, let me think.
I get them all in a bundle. I
streaming.
have Disney, Hulu, ESPN all in a bundle. So I would think that's the same with most people, no?
No, I'm just looking at, what do they do though, right? Because it's just like another channel. Gentlemen, thank you so much. Jamie Lumley, senior analyst on the phone in New York City over at Third Bridge Group, and Paul Sweeney, of course, co-host of Bloomberg Surveillance and Bloomberg Markets, and really our go-to internally when it comes to media. Disney shares, Matt, are down 2.2%. Marvel, you know nothing? Have you not seen any of them? Captain
I'm not
America?
into superheroes or comic books.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Walt Disney reporting second quarter sales and profit in line with Wall Street's expectations, along with a smaller than anticipated loss in its streaming TV business. But after hours, shares of the Walt Disney Company, they're now down by 2.2%. And with the conference call about to get underway, what is the question to ask? Jamie Lumley is senior analyst at Third Bridge Group, and he was interviewed right here on Bloomberg Business Week.
I'm still curious to hear what's happening with Hulu. I think that's one of the big question marks coming off of the back of the leadership transition. Another of those areas with a lot of uncertainty. So also how that factors into streaming is another big area.
And again, we've got Disney shares after hours down now by about 2.3%. Robinhood reported net revenue for the first quarter that had beat the average analyst estimate. After hours, Robinhood moving higher now, up by 3.1%. And Beyond Meat, that stock surging 9.8%. It reported net revenue for the first quarter that did beat the average analyst estimate. Lots going on after the close. Keep it locked in to Bloomberg Radio for the latest on Disney, as well as Beyond Meat and Robinhood. Stocks mixed today. We had the S&P up 18 points, a listless session up by about 0.45%. The Dow lower by 30, down 0.1%. NASDAQ up 126 points, up by 1%. 10-year yield at 3.43%. The 2-year 3.90%. Gold 2,030 the ounce, down 0.2%. Bitcoin up 0.9%. 27,921. And West Texas Intermediate crude down 1.3%, 72.78 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time to talk a little bit about Alphabet because, man, this stock actually higher and rallied in a big way in today's session, up about 4%, top in the NASDAQ 100 and S&P 500. This following making a bunch of announcements at its I/O conference in Mountain View, California today, Matt.
I'm waiting to use this, what's it called, Search Labs or something? It's the new AI-powered version of Google Search, because I have been playing around with Microsoft's version of AI-powered Bing, and it has been really very useful.
Okay.
I've been getting succinct answers to very complicated questions with sources, so I can go back and double-check the answers myself. So, Google obviously dominates, completely rules in search. But if Bing makes headway like this, it continues to, I can imagine them gaining market share.
All right, so let's bring in Ed Ludlow, who's waiting patiently for us and tweeting that he's coming up. Ed, you were there at the event. Tell us about it. First of all, set the scene, like what this event is all about, and then what we got from Alphabet.
Yeah, so Google I/O is the annual developers conference that Google holds here in Mountain View at the Shoreline Amphitheater. Beautiful, by the way, if you guys ever get to come and visit. But it was always going to be about AI, right? I think that we've discussed a lot about the pressure that Alphabet and the parent company of Google has been under to share the work that it's been doing in the field of artificial intelligence. It's a company that on the research side is at the very origins of work in foundational models in AI. But we want to know how it becomes consumer facing. And we just got that bang smack in the face today. We learned about everything. And, Matt, you brought a tear to my eye learning that your inner technologist is coming out. But search was probably the main takeaway, right? That there is going to be a slow, cautious, limited, rolled out release of an AI or a generative AI powered search. And it looks very different to what the traditional Google search is. And you're right, it's a market Google dominates.
So have you tried the product, or do you have to be on a wait list in order to get it? How can we mess around with it? Because we can with ChatGPT and we can with AI-powered Bing.
Yes. No, I have not had access to it. There will be a rolled, limited waitlist style access for the next generation of search through labs, as you said, and then a broader release to the public in the same way they handled the release of Bard, the generative AI tool, the conversational generative AI tool. Remember that within Alphabet, Google, there's an acknowledgement that there is caution needed in the rollout of these technologies. A lot is at stake. But remember that they have the experience and the lever of the huge volume of data that comes from Google Search and Maps to develop the technology. So it's going to be slow. You're going to have to wait and get on the wait list just like me. What it looks like is if you do a Google search, you know what it's like. Many pages of ranked results with a headline and a body of text. What the generative AI-powered search looks like is actually a much more focused result. It will give you a couple of paragraphs of specific text answering your query, along with very specific links and images related to your result based on the logical conclusions that were reached by the large language model. So it does look different, and I'd encourage the audience and listeners worldwide to go out and Google what it looks like.
So, Ed, I feel like there was a lot of shade thrown towards Alphabet following Microsoft coming out, and it felt like, where's Google in all of this?
Yes.
Have we answered kind of enough of those questions that investors, I mean, obviously investors seem to like what they got
Also,
from the
Bard
company
seemed
today.
to be a flop, right?
Well, and
Yes.
like that's the other thing, like where does Bard fit into all of this?
Bard has always been described by Google as a creative companion. They never said that it was going to displace or replace search. It's a different tool. It's a conversational generative AI tool like ChatGPT. What you mentioned about the investor reaction is really important. If you look at the stock and trading throughout the day, the session high was reached when Google explained how generative AI will improve the functionality of things that are commonplace, like Gmail, Sheets, Docs, Slides, and they gave really specific examples of how those tools can be improved, literally using the generative AI bar or tool to do work in an automated fashion that people spend hours every day doing manually, typing out emails or creating spreadsheets. All of that now can be automated, but again, there'll be a slower release to the consumer and business-facing versions of those tools.
What else have you learned up there, Ed? I've seen you doing interviews. You've been at Google all day long. You're also obviously one of the co-hosts of Bloomberg Tech. So you cover this industry day in and day out. It must be like almost like the Super Bowl for you. They're surrounded by your fellow techies. What are you taking away from your day up at Google at Mountain View?
I'm surrounded by my fellow techies. This is the Super Bowl of web nerds and developer announcements. I think that's fair. What I would say is this. You noted the third-party data around search, right? So Google dominates 90% globally of the search market. But on the devices side, it's tiny. 1% of the global smartphone market last year. And they came out today with a foldable smartphone. It unfolds from being a smartphone to being a tablet. But it's incredibly expensive, $1,799. But it's still linked to AI, because what the analysts are interested in and the technologists are interested in is if you have a smartphone with that type of screen size, that level of processing power through the chip, what are the future functions that you can do when AI is enabled through a device? And why that's important, Matt and Carol, is that today they came out with a new large language model, Palm, which is basically trained on so many more billions of parameters than previous generation models. But the smallest version of it works on a mobile device. You're able to do that compute through your smartphone device. And so I think Google's demonstrating that they can grow all parts of their business. The device side where they're tiny, right through to search where they're dominant. They're showing that their experience and competence in AI, actually, they're not falling behind as people had suggested.
By the way, this brings up an interesting point, Ed. And, you know, I'm sure you've heard a ton of people pitching you their ideas for AI, the killer app for this technology. It's limited by IP, right? Because, for example, I would love to have an AI search bot comb through Auto Trader and Car Gurus and car garages to find something that's very difficult, to browse through the computers, to look at all of the different variations. But they won't be allowed to. They'll be blocked at the beginning, at the entrance of each of those websites because they don't have the IP. Does Google feel like they have their hands tied a little bit by that?
No, and you know, IP I get your point. Really, what it comes down to in the development of foundational models is data. Where your data source is how rich it is. Think about AI in 3 parts. Data prep, getting hold of some data, then deep learning is stage 2, using that to train the models, and then inference is the logical conclusion that the model draws based on the commands you put to it. Well, Google has search, and Google has maps, and Google has Gmail, and it has billions of users around the world. Very closely tied to Google, all of the e-commerce models and platforms around the world that we know, they have more real-time pricing data on the e-commerce side than anyone else. So yes, I get your point on the limitations of the IP, but in terms of the data that trains this AI, they're kind of unprecedented and unparalleled in
So
that
that's a huge
respect.
advantage,
And
really,
they've
that they
also
have
got
in
the
that
research
sense.
history.
Which is what Andy McAfee at MIT said to us. I mean, the whole idea of this, you know, language-based AI, right? It just gets smarter and smarter by the amount of information. And if you're talking about data points, Google has so much. All right, so where do we go forward with this? I mean, what was still left when you went through all of this today? What was it you still wanted to know? Was there anything, or did you feel like they covered it?
No departure from the cautious approach. You know, they did not move as quickly as Microsoft, and the message is quite consistent. We're not going to open up generative AI-powered search very fast. It will be tiered. That's interesting. But what was interesting is actually the demos themselves. If you're out there and you're a listener using Gmail or Sheets or Docs, then seeing how that tool can be changed using generative AI, it's just very logical. It automates a lot of the manual parts of everyday drudgery that all of us don't like doing. And when you see it and experience it, you come to understand why this is actual technology, why it changes and innovates quite basic daily function.
Didn't you and Caroline Hyde do a show and you wrote the introductions with it? Really quickly?
Yes.
That's what
I mean, I was telling Google today that when I first got access to Bard, the first thing I did was write a TV script with it for the show.
I love it. I love it. Ed Ludlow, we love you. Thank you so much with the rundown on what was going on at Alphabet today. Hey, let's get a rundown of world and national news off to D.C. and Nancy Lyons.
Thanks, Carol. Congressman George Santos says he plans to clear his name after being arrested and charged with fraud and money laundering. Bloomberg's Jill Schneider has more on his court appearance today.
Santos was arraigned in federal court in Central Islip, New York, where he pleaded not guilty. The 13-count indictment, which also includes theft of public funds and making false statements to the U.S. House of Representatives, follows a 5-month investigation that began shortly after Santos was elected in November. It sheds light on some of the mysteries surrounding the 34-year-old, who won on the strength of a resume of Wall Street accomplishments that turned out to be almost entirely made up. Despite growing calls for his resignation, Santos says he intends to continue his re-election campaign. Jill Schneider, Bloomberg Radio.
President Biden is making his case for a clean bill to raise the debt ceiling, appearing today in upstate New York. He says the GOP plan attaches spending cuts to the debt limit, and that would hurt many spending priorities, including veterans care.
Why do so many veterans groups, why have they spoken out in opposition to the Republican proposal? They're not all Democrats. They know what's going to happen. Folks, that's a game Republicans are playing. Anytime you single out the impact of their overall cuts, they tell you, no, it's not true. But they're wrong.
Biden says if Republicans did not want to cut veterans' benefits with their bill, then why did not they single them out as an exception? The two leaders will be meeting again on Friday with other congressional leaders. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We check markets all day long here at Bloomberg. Shares of the Walt Disney Company, they are lower after hours now, down by 3%. Disney reported second quarter sales and profit in line with Wall Street's expectations, as well as a smaller than anticipated loss in its streaming TV business. Paul Sweeney is co-host of Bloomberg Markets. He is keeping track of Disney shares after hours, and he spoke with us moments ago right here on Bloomberg Business Week.
One item I went to was the streaming losses. Now, the good news is the losses of $659 million came in less than the estimates, which is about $850 million. So that's the good news. The bad news is $659 million is still a huge loss just for one quarter.
And again, after hours, Disney down now by 2.9%. Also reporting earnings after the close of trading today, Beyond Meat, that stock surging 9.4%. First quarter sales did beat Wall Street's expectations. Robinhood is reporting net revenue for the first quarter that beat the average analyst estimate. Robinhood after hours trading higher now, up by just about 5%. Airbnb posted their biggest ever decline today after the vacation home rental company gave a cautious outlook for revenue. Airbnb down 10.9%. Alan Lance is research director at lanceglobal.com. And right here on Bloomberg Business Week, he told us he's a buyer of Airbnb if there are more declines.
If it falls back a few more days like today, and we'd be back then buying, it's a long-term, hold, at these levels. But again, it shows the importance of taking profit.
It was a mixed CPI Wednesday today. The Dow down 30, drop there of 0.1%. S&P up 18, gain there of 0.45%. NASDAQ up 126, up by 1%. 10-year yield 3.43% with the 2-year 3.90%. Spot gold down $3 the ounce to 2,031, down 0.2%. Bitcoin up by about 0.9%, 27,895. And West Texas Intermediate crude down 1.3%. 72.78 a barrel. So again, recapping, turned out to be a mixed Wednesday here with the S&P 500 index up 18, up by 0.5%. And that is a Bloomberg Business Flash.
I blame AI, Charlie. I'm just going to say.
Yeah, great conversation, by the way, with AI.
We're going to continue with AI right now. We've had a lot when it comes to artificial intelligence and certainly the next level AI. We heard Palantir earlier in the week, the CEO saying in terms of their strategy, they said they're just going to take the whole market. We just talked about with Ed Ludlow about Alphabet and Google's
IBM's
plans.
brought Watson back.
IBM has brought Watson back. I mean,
to no fanfare at all.
AI's been around for a long time. It's just getting a lot smarter, and we can actually talk to it, if you will, or talk with it. So let's get another take on AI. With us is Beirut Shaith. He is co-founder and CEO at the conversational messaging platform for commerce, marketing, and support there called Gupshup, and he's here in our Bloomberg Interactive Brokers studio. Beirut, good to have you here with Matt and myself. Tell us a little bit. You guys are all in on AI. What specifically, is it just about when we call a company, you can be behind it in terms of your platform?
Yeah, firstly, Carol, Matt, thanks for having me here. That's exactly right? Helping businesses and brands build these conversational experiences or chatbots through which they can engage with customers. So for a consumer, the consumer experience is that chatting with a business is just as easy as chatting with a friend or family member. You ask them questions, and through those conversations, you can get deals, offers, shopping, payments, customer support, troubleshooting, and so on.
Or not easy.
I should
have warned you about Matt.
Well, I have used some chatbots recently with a couple of your clients, for example, Verizon, and the experience I had was nothing like a conversation. In fact, I thought it might have been the dumbest piece of technology that I'd ever interacted with. Now, I was also angry at the time, to be fair, about Verizon, nothing to do with the chatbot, but are you saying that your technology is able to do that stuff now, or that, 5 to 10 years down the road, they should be able to do that?
No, I think it's more like 6 to 12 months now, right? What's changed? Okay, what's fundamentally changed a few months ago is that these large language models it was a huge step function in capability, meaning it's just dramatic improvement. And all of those are now trickling into these experiences. So it takes a little bit of time, but in the next few, it's a matter of months, because the hard part is done. It just has to be integrated. But the fact that they can handle these conversations in a natural way, understand, interpret, sense what the query is, and then provide good responses, etc. It takes a little bit of work to optimize it for a particular enterprise.
But what was the big jump? What was it all of a sudden? Because AI, as we've said, right, this has been around, but what happened? What was the big jump in particular?
Yeah, no, that's a great question. See, AI, I mean, I did my graduate research 20, 30 years ago in AI, and it's been going around for 70, 80 years, right? AI has been making constant progress out of the limelight. I think what happened literally over the last 6 months was it reached a point, and basically three things came together, right? One is on the software algorithm side, there was ideas around deep learning and the transformer, which was amazing. The other is Moore's law, right? Hardware getting better and faster. And then the third is data, right? Internet data, the volume of data available for training has become available. So these three things together. And then I guess it's just a numeric thing, which is at a certain number of parameters, right? At 100 million, it wasn't good, but at 100 billion parameters, suddenly it understands language.
So it hit some tipping point where all of a sudden it became actually really productive.
So from a media standpoint, it looks like it went from nothing to something, but you know, AI research has been going on, making steady progress.
But I mean, you know, when I talk to a chatbot online at any of these big companies, or if I get a computer on the hotline, it's just a horribly frustrating experience. And your business is very impressive, Gupshup. You have a ton of clients. You have marquee investors. You know, you have a huge $1.4 billion valuation. So I have a lot of respect for that. But I have to guess, when you talk to people who interact with chatbots, they're all as frustrated as I am, because I'm finding myself saying, agent, 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 get me to a human, because I can't get anything done with the, I hate to call it AI, because there's nothing intelligent about the current services.
So I'll answer, there are two aspects to it, right? One says, if we just step away from the US for a second, in the rest of the world where you don't have as many customer support agents, as many businesses investing in these things, for consumers, if their baseline is zero, a chatbot that works half the time is a miracle, right? Because it solves a lot of problems. You don't have to wait on hold. You don't have to wait in long queues and so on. So there's a lot of people around the world.
If your problem is solved. But if your problem isn't solved, then there's another 2 or 3 minutes that you've wasted talking to a chatbot.
But what you're saying is, this is what we're finding. The more information that goes into it, it's going to get better. Because to be fair, like, we've all been in that point where we're like, get me out of it.
Well, we would hope so, right? You're saying it's going to improve someday?
No, but now we are on the cusp of it. Okay, because of what OpenAI, and there's just one example, but there are many other models, you know, Meta and Google and even the open source community is just driving it. So it solved the hard part of understanding language, which is the hardest thing. The second bit is packaging it into specific business conversations. That's remaining, but that's now like weeks or months away. We're doing that for a whole bunch of enterprises, you know, and you kind of have to handcraft the integration a little bit, but we are even productizing that. So
how do you protect the accuracy and the purity of the information? So it's not a case of we're doing something, then we're Googling, you know, later on, and we're trying to do our own research on it.
And that's exactly what takes time, right? These general language models are simple word prediction, meaning they just make up, they're generative, right? So they kind of make up an answer. It may not be accurate. So, but in a business context, you need accurate information. So we do, there's a process called fine tuning. There's something called prompt engineering. And then you also link it to plugins which give you the actual data, right? So, for example, what's the interest rate on a checking account? I mean, you can't make up an answer, even though AI will. So there, it looks up the right answer from the right place, or it says.
How are we going to know as users that it's the right answer?
Well, so the business has the responsibility and the onus to make sure, because they also have the liability for what the bot says, right? So I think this is exactly where we work with them to make sure that the conversations are precise, they're accurate, the information works, and so on. And then there's a lot of debugging and so on, right? It was look, the web wasn't built overnight, and neither will these chatbots. But I think as they get optimized and refined, I think it'll be good enough for you, Matt. You know?
I'm excited. I'm looking forward to the future. I'm just saying.
You have a little daughter.
I'm still a little bit hurt from my Verizon interaction.
She's going to learn her language. Like, it takes some time.
Exactly.
How busy are you? Just 10 seconds. Are people calling you off the phone, or just give me an idea?
Yeah, this is accelerating. I mean, we are doubling business year over year, and it's accelerating even more. Yeah.
All right. Well, come on back so we can, you know, make Matt happy. that this
Okay.
future chat
I know.
GPT experiences will be better.
Well, even better, the next time I'm
Get-
here, you'll talk to my chatbot.
Yeah,
All right, here.
exactly. He'll do the interviews for you.
All right, we
Or
got to
it.
run. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Disney shares, lows of the session right now. They are down by 4.1%. After earnings, Disney did report second quarter sales and profit in line with Wall Street's expectations and a smaller than anticipated loss in its streaming TV business. But after hours, Disney stock falling now by 4.2%. Beyond Meat shares, they're heading the other direction, up 6.5% right now, surging in late trading after first quarter sales beat Wall Street's expectations. International revenue offset weakness in the U.S. for the plant-based meat maker. Research firm J.D. Power is out with its 2023 North American Airline Satisfaction Survey, and with a look at that, here's Bloomberg's Steve Rappaport.
Charlie, top grades went to JetBlue Airways, which for the second year in a row surpassed Delta Airlines as the best overall airline for passenger satisfaction in first and business class segments. Southwest Airlines took the top spot among consumers as the best carrier for economy travel in spite of its multiple recent failures. American Airlines Group struggled across the board, ranking among the 3 worst airlines for every type of cabin class available. Unsurprisingly, it's the travelers in the back of the plane who have the loudest complaints. Satisfaction with flying economy has dropped 19 points as price-conscious customers find costs and fees to be their greatest pain point. Charlie?
And that's Steve Rappaport reporting today. Turbulence for those airline names. JetBlue, case in point, down by 1%. American was down 0.9%. Delta down 1.2%. And Southwest down by 1.3%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Matt Miller here. I'm filling in for Tim Stenevec for a while.
Do you remember who you are?
With Carol Masser. You know what? I keep forgetting to hit the on-off switch here at the microphone.
If only I had a ChatGPT to tell me what to do.
I had AI to do my job. Hey, AI could tell you this. We're going to check on the latest world and national news right now. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C.
Thanks, Matt. With Title 42 expiring tomorrow, the U.S. is surging personnel to the southern border to deal with an expected rise in border crossings. Homeland Security Secretary Alejandro Mayorkas says they will be implementing a new rule to increase consequences for those who fail to use legal pathways to come into the country.
The rule presumes that those who do not use lawful pathways to enter the United States are ineligible for asylum. It allows the United States, it allows us to remove individuals who do not establish a reasonable fear of persecution in the country of removal.
Mayorkas says the U.S. is also launching a new digital campaign in Central and South America, letting people there know about U.S. immigration laws and warning them about smugglers. Embattled New York Congressman George Santos is facing more than a dozen federal criminal charges. The New York Republican pleaded not guilty today to charges of fraud, money laundering, theft of public funds, and false statements. He spoke after his first court appearance.
I'm going to fight my battle. I'm going to deliver. I'm going to fight the witch hunt. I'm going to take care of clearing my name, and I look forward to doing that.
Santos says he will not resign from Congress and will continue his re-election campaign. President Biden says federal spending cuts demanded by Republicans to be included in the debt ceiling talks would be devastating. He spoke today in Valhalla, New York.
21 million people at risk of losing Medicaid. Cut federal law enforcement officers. Cut 30 million veterans' health care visits.
Biden says consumers would also see higher interest rates for credit cards, car loans, and mortgages. He'll meet again with congressional leaders on Friday to continue discussions on raising the debt limit. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Matt.
All right, Nance, thanks so much. Well, a lot of questions remain about the impact on startups and funding of such in the wake of the collapse of Silicon Valley Bank. On that, in today's Wall Street Week Daily segment, Bloomberg's David Weston catching up with Ann Berry, founder and managing partner of Threadneedle Ventures. They talked about tightening credit conditions.
Well, there's two things going on. It's the tightening credit means that the availability of traditional loans has become a little bit more constricted. So you're seeing private lenders get a lot more creative in how they're structuring deals. I'm seeing PIK deals coming back. I remember that from 2012. They've been gone for a while, hibernating. That's number one. Number two, you've got the private equity industry looking at the maturity wall that's coming up this year, next year, 2025, at a much higher rate level than those deals were originally done, than those loans were issued at originally. And they're saying, what are we